Have you been thinking about getting into real estate investing, buying real estate with your hard-earned money in order to build personal and family wealth? But you may not know where to start, or what the processes are, or what the potential pitfalls might be. If so, you're going to want to check out this video. I'm going to run down seven very important points that you'll need to remember if you're getting into the real estate investment game. Folks, my name's Armand, realtor with Team Armand EXP. Please like, comment, and subscribe to our channel to be the first to hear about news, what's happening here in the Triangle real estate market. Okay, let's get into this. Folks, I've been in real estate for over 20 years, and I've helped many folks buy and sell real estate here in the Triangle market. Let me run down seven very important points for you to keep in mind if you're going to be considering real estate as an investment. First of all, the thing to consider is, are you going to be a buy and hold investor or a fix and flip? Let's run down what it means to be a buy and hold. Buy and hold means you're going to be buying it, fixing it up, and then renting it out, and holding it literally as a long-term investment. So one important consideration here is the neighborhood or location of the property you're considering. Is it a great place as a potential rental? I can tell you that I work with many rental property managers, and if you're curious about whether a neighborhood or a particular house is easy to rent, I can get you connected with a really good property manager that can give you a quick, no obligation estimate on how easy it would be to rent that property out and pretty much what the rent might be. In fact, you and I could probably figure out what the rent is going to be pretty easily based on what's sort of the going rates in that area. One important point about the buy and hold idea is, yes, it's a long-term investment. And you're going to want to hold on that for a number of years. Of course, you're going to want to make sure that it's turning you a profit year over year. So we need to look at that, at the return on investment in terms of the monthly rent you'll be able to get versus how much you put into the property. And eventually, you'll need to consider appreciation. Appreciation is one of those hidden wealth things that we have here in real estate. It's kind of money out of nowhere. There's really nothing you're doing to really add value to the property. It just, real estate appreciates very steadily over the years. And in the end, when it comes time to sell this property, one thing you're going to want to consider is whether or not you want to do a 1031 exchange. Now, I shouldn't give legal or tax advice here. I'm neither a lawyer nor a tax accountant. I don't have degrees in either one of those fields. What I can say is a 1031 exchange is something that the home sellers or investment property sellers should consider because it protects the gain on your property if you reinvest it into another real estate investment vehicle. Ask me about that sometime if you're curious about that. The second thing to consider is whether or not you want to be a fix and flip type of real estate investor. Perfectly great way to go about real estate investing. That's where you buy a property, fix it up, and then pretty quickly, immediately turn around and sell it for a quick profit. One thing to remember is that process does not allow the homeowner or the property owner to do a 1031 exchange. The IRS is not really going to look at that as a long-term investment, which is what's required with the 1031 exchange. That said, if you can fix it up and turn around and sell it in a relatively short time, you've got a pretty good return on an investment as far as the dollars you spend on that property buying it and fixing it up. And you can take that profit and quickly put it into another property and do the same thing, fix and flip, fix and flip, fix and flip. Perfectly acceptable way of doing real estate investing. A third way to do real estate investing is something called land banking. That's something that not a whole lot of people are doing these days, but it's worth considering. That said, what it means is buying a piece of land and holding it. It's kind of the ultimate buy and hold type of real estate investment. And honestly, here in the Triangle area, there's just not a lot of land to be bought. Yes, we do see some pretty good lots coming on the market, and within town and so forth. Those lots are kind of designed to be built on with pretty quickly. It's hard to find land that is just kind of sitting there for sale and is worthy of being bought to hold. Generally speaking, we see the buy and hold, the land banking thing done outside the Triangle in the farthest reaches of the Triangle. The fourth way to go about real estate investing, well, we just talked about land banking. Sort of the opposite of that is to buy a piece of land and immediately build a house on it. Yeah, that's certainly a tried and true way of doing real estate investing, and it's really a big, huge real estate business. And in fact, yeah, that's worthy of consideration. There are a good number of people who have just gotten into the real estate investment game by doing that. You simply find a pretty good lot that's for sale, generally speaking, as close to in town as you can find, and then build a house on it. Become a general contractor or hire a home builder to do it. Just be the owner and hire a home builder to build the house for you. That can be done. The fifth consideration is price points. At what price point should you consider purchasing a real estate investment, whether it be buy and hold or fix and flip or so forth? Well, here in the Triangle area at this time, here in 2024, honestly speaking, we see kind of the sweet spot for any one of these techniques as being in the $200,000 to $300,000 range. I'll be honest with you, there's almost nothing available right now under $150,000 all through the Triangle. I literally had a potential home investor come to me just the other day and asked me about this. I did a quick search through our MLS. In the 4-county area of Wake County, Durham County, Orange County, and Chatham County, there was literally only one property listed for sale in our entire MLS system under $150,000. That just shows you how little we actually have to sell here in the Triangle area here in 2024. And it's been that way for a number of years. I'll be honest with you, 15, 20 years ago when I first got into real estate, we could find properties all the time for little houses in downtown Durham and in Chapel Hill and Raleigh, literally listed for $30,000, $40,000, $45,000. And yeah, those are great fix and flip or buy and hold type properties. These days, those days are long gone. There's really nothing available, like I said, under $150,000. That said, $200,000 to $300,000 is a pretty good place to start. Now the question is, well, if let's say you buy a house for $250,000, how much can you expect to invest in that property in order to make it livable, and either as a buy and hold or fix and flip? Now, generally speaking, these days we're seeing about $30,000 to $60,000 being spent on these homes in order to make them profitable again. So definitely that has to be looked at. Every single time you look at a house, expect about that much to be spent. There are ways of bringing that number down. Of course, if you have your own crew and can pay your crew directly and become a general contractor yourself or a contractor, you can keep those costs down, but I wouldn't expect to spend much less than $30,000, to be honest with you. So keep that in mind. By the way, there are opportunities to do this kind of real estate investing thing in the $300,000 to $500,000 range. There are some distressed properties on the market occasionally in that range. They're worth looking at. Keep in mind that the more money you're putting into the house, the more risk there is. That said, the more risk, the more potential reward. So be careful, be cognizant of your appetite for risk. So be careful about that. But there are opportunities in the $300,000 to $500,000 range. The sixth consideration is, well, what to spend. Literally, should I be spending cash or should I get a loan to purchase this real estate investment property? Well, that's very much a personal decision. It's definitely an economic philosophy question. I will tell you, back 20 years ago, there were a lot of real estate gurus that were saying, buy property with other people's money and get rich quick. You know, have as little of your own money invested in the property as possible to use the leverage of other people's money and, build up a portfolio of 5, 10, 20, 50 houses really, really quickly. And that's where you're going to get rich, right? Yeah, we saw a lot of gurus advising that. And in 2008, when the market crashed, a lot of people lost their shirt. So be very, very, very careful about real estate philosophies like that. I'm not saying don't do it, but if you do it, be very, very careful. My recommendation, honestly, is to buy with cash. Always use cash. That gives you what I call the sleep factor. Being able to sleep well at night, knowing that if that property goes vacant, you're not immediately hit with huge mortgage payments as you gotta keep paying, and maybe you have to take out another mortgage on another house in order to keep paying this, another mortgage on this house to keep paying that. Buy with cash. You'll sleep much better at night. And by the way, that goes for the repairs too. It's better to, you can get a home equity line of credits and to make these repairs. Just be very careful. Once again, you're paying interest on something. If you don't sell that property immediately or get it rented out, you're going to be hit with interest payments, and those can hurt. By the way, back to the repairs. Just thought I'd mention, when you do repairs on these houses, be very careful to get them done with all possible permits. I can't tell you how many times I've had a real estate investor come to me and say, hey, I've got this great house. We fixed it. We're ready to flip it. Please list it and sell it for me immediately. I said, okay, great. Let me take a look. And I take a look and I find this. That looked like it needed a permit. Did you get a permit? No, my contractor did that. He knows how to do it. No permit was really needed. Yeah. If the county says a permit was required, a permit was required. What about septic systems? Man, you really got to get those checked out. That's like radioactive stuff. You can't touch that without a permit. So be very careful about permitting. The last thing we'll talk about here, number 7, is how do you find your properties to buy? Well, it used to be, once again, back in the day, we were looking at a lot of foreclosures. And you could find foreclosures one of two ways. You could find them listed in the MLS, or actually a fair amount of them listed back 15, 20, 10, well, no, not 10 years ago, 15 or 20 years ago. You could also go to the courthouse and literally check the bulletin board of the courthouse and see what was being foreclosed in the next 10 or 15 or 20, 30 days. Honestly speaking, these days here in 2024, there's just not a lot of foreclosures happening. Yes, they've ticked up a little bit since 2022 and 21, but nothing like compared to what was happening in 2008, 9, and 10, and literally in the years before that. So foreclosures is probably not going to be a very profitable way to go about finding your property. So where do we find the properties? Well, there's two final ways you can look. Number one is through our MLS system. Like I said, there's not a whole lot listed in the MLS system right now under $150,000, barely anything under $200,000. There's a few properties listed from 200 to 300 that might be worthy of consideration. And that really brings us to the last thing. The third thing, third way to find properties is with a great real estate agent, a realtor who really knows how to look out for your best interest. Well, that realtor is going to be looking in the MLS daily for you and checking out properties for you. They're going to be able to quickly investigate any property that's listed. But even more so, a real estate agent that's been in the business a long time, like me, frankly, I've been in business well over 20 years, they actually probably have a lot of home sellers coming to them. I shouldn't say a lot. A fair amount of home sellers come to them and say, hey, I've got this property, I've got to sell it. Maybe they inherited it through the family, and it's just not in good shape, and we just don't have a whole lot of money or time or energy or desire to fix it up to get top dollar. Let's just sell it as is, where it is. To be honest with you, and they don't even want to bother putting it in the MLS. I have a lot of investors that come to me personally and say, hey, if you got properties need to be bought, not through the MLS, let me have a crack at it first, and I'll give you top dollar for it. So my job as a real estate agent realtor is to connect these two parties and get the deal done. I've got a fair amount of those deals happening pretty much all the time. Talk to me if you're an investor wanting to do that. To be honest with you, there's not a whole lot of them out there, but there are some. And a good top agent will always have a few properties like that in their back pocket. By the way, if you're a home seller and you need to get this done, I'd be happy to help. Folks, my name's Armand, realtor with Team Armand EXP Realty. I really appreciate you taking the time to watch this video. Please give me a like, or let me know in the comments what you liked or didn't like about this video, or if there's some other subject you'd like me to cover in upcoming videos. We're doing videos at least every week at this point, and we're trying to cover as much important information about the real estate market here in the Triangle area as we can. Thanks for your time. I really appreciate it. We'll see you on the next video. Thanks.